right, what's up, everyone? Welcome to the private BNB Formula Podcast. My name is Alex Jarbo. I'm one of the coaches in the BNB Formula coaching program. Today, we have a really awesome episode for you guys. We have two reps from the Host Financial company. This is a company that I've tried to work with, and we've done some stuff together in the past. And it's honestly, when I first started, this was the first company that everyone would recommend to me when it came to short-term rental financing. So I'm super excited to have Adam on. Adam, how are you doing, man?
Good, man. How are you?
Good. And we also have Daniel as well from Host as well. What's up, man?
Hey, thanks for having us.
Yeah, guys. So if you guys want to start, Adam, Daniel, just your guys' background, where Host Financial is at, what Host Financial is, and then what your guys' plans are for the future with the company.
Yeah, Host Financial is a creative financing company tailored toward short-term rental investors. It started in 2008 as a solution to, 2018. Wow, definitely not then. 2018 as a solution.
Good time to start a company, 2008.
Yeah, right, exactly.
Started by real estate. Started 2018 as a solution to our own problem. I had just sold a company in 2018, and I dabbled with short-term rentals before. And looking on to the next part of my journey, I was thinking of what to do, and short-term rentals just kept popping up for me as what I'd like to spend my time doing. So in my journey of exploring acquisition and in particular the financing component of acquiring a short-term rental, I found specifically for someone like myself that had been a lifetime entrepreneur, didn't have the traditional W-2 income but had liquidity, that I find conventional lending was difficult. So Adam, who I had met through living in San Diego, had been in real estate development and finance for 10 to 15 years. So we got together and I said, hey, here's this problem. Let's figure out what the potential solutions for financing a short-term rental could be.
Yeah, like Dan said, my background is in real estate development and real estate finance. So I'd been doing that in San Diego for about 10 years. And when Dan and I got connected, he was kind of showing me the deals that he was looking at, kind of just the standard numbers and returns on these short-term rentals, what kind of cash on cash you could get, what kind of IRR, which, I'm looking at it from a traditional real estate perspective, and it's great. The numbers are fantastic. But then, couple that with the fact that you can't really get financing on it. It just seems like, if Dan was having this problem and this was a problem in the industry, that, we could kind of create some solutions and kind of build a company around that. So that's what got me really interested. Short-term rentals are an emerging asset class onto themselves, just like office or retail or, multifamily long-term rentals. So, I'm looking at it that perspective, and all those type of asset classes get underwritten and funded based on the income of the property. You're not looking at, what the borrower's W-2 income is and all these other things, the challenges that Dan was having. So it just seemed, that there was an opportunity there. And, I had a lot of contacts in capital markets from my time in development. So we just started, reaching out to these groups and trying to put together some programs that solved a lot of the problems that the short-term rental investor was encountering, mainly being able to underwrite these deals using that short-term rental income, that higher potential income that you get on a property. And that's kind of the genesis of the company. And we've been growing ever since. Obviously went through a couple challenging years with COVID and all of that, but we've made it through that and have been just growing ever since.
Yeah, that's awesome, man. So when we were just talking about this previously, when it comes to Host Financial compared to some of the other, I guess, short-term rental financing options out there, what would you guys say what sets Host Financial apart from a lot of those? Because your company always constantly is recommended as one of the top, if not the leader in this industry when it comes to short-term rental financing.
Yeah. So a couple thoughts on that. So we kind of operate in a little bit of a different or hybrid capacity than a lot of other lenders or even other brokers that are out there. Got facilities that we can direct originate these loans under. And then, like you said, we've been in the space for so long. We have all of the relationships with the other players in the capital space that if for some reason, the specific deal that comes in, because all these deals are unique, right? It's a different asset class, different location, different price point. There's a number of different factors within the deal that can really kind of change all the terms. But since we've been doing this for so long, and that's been our focus, we have all these relationships in the capital markets. So if the facilities that we have aren't the best option, we can partner with with our capital markets folks to get the deal done that way. And since we only focus on short-term rentals for the most part, we do all other types of investor finance, but that's obviously a big focus. We get wholesale pricing from all of our capital partners in the space. So really, if you come through us versus any of these other retail lenders out there that are kind of promoting short-term rentals now, the pricing is actually better with hosts than it is going retail with anybody else, because we represent anywhere from 100 to 200 million in annual loan volume. So that's a big volume kind of play. Whereas getting a deal done with hosts is a lot different than getting a one-off deal from a retail perspective.
Yeah, I just want to add to that. So to simplify what Adam said, it's if you're coming to us, you're basically instantly getting quoted any possible option to qualify that any potential lender out there in the DSCR space could qualify you with. And in addition to that, there, as Adam said, there's a lot of different nuances to a deal. In which case guidelines, rates change. So if in the middle of a deal that no longer is the best option, or your deal doesn't qualify, we already have all your files and we can just switch it to a different lending source without it really,
like having to
shop around, requalify or anything like that. So we can adjust. And really, all of our account executives, they're experts in short-term rentals. 95% of our deals are short-term rentals. So we understand what the strategy is. There's no question about, an underwriter finding out that it's a short-term rental and they're saying we can't do it because an LO at a different lending shop was, not disclosing that or wasn't understanding that, or we're trying to qualify with market rents for the short-term rental income. So there's, confidence in that what we're doing, we're experts. And then two, simplicity for shopping. You don't have to shop, and we're experts in what we do.
Yeah, we were chatting about it before, Alex. I think you mentioned, getting retraded last year on the terms, as it happened to a lot of I'm sure it happened to a lot of investors, a lot of different lending shops. The interest rate markets were crazy, and I think we're going to be in this dynamic interest rate environment, probably for the next, through this year and probably into next year. So there can be some pretty big, pricing differences between different capital sources as the rates move and fluctuate up and down and sideways. So, we've been able to salvage deals for clients, like you mentioned, that they get retraded, because they're going with lender A over here. We're able to actually salvage that deal and, be able to repivot it to a different capital source and maintain the rate as, close as that they were expecting in the initial onboarding.
Yeah, no, that's awesome. And that sort of leads me to my next question, which is based off the deals that you guys are working on right now, because there's a lot of, I would say, like scuttlebutt when it comes to like the short-term rental industry in general. Like, I mean, the last 3 weeks, I think like the top hashtag that was trending in this industry was like BNB bust or Airbnb bust or whatever. It's just like an article that was pushed out by Bigger Pockets, and I feel like every news station took a hold of it, from the big news stations all the way down to like the smaller like local ones. But what do you guys foresee the future of the short-term rental markets? Because I'm still actively actively developing and acquiring properties. Like I'm looking at properties every single day, and I've always said, like, it doesn't matter what the market is doing, still underwrite the property. If the deal cash flows and the numbers still work, yeah, it sucks that you're paying a certain interest rate right now, but imagine where you're going to be in a year or whatever the interest rates decide to drop. Imagine where you're going to be in that time if you can get that property cash flow right now, where you can like do a refinance or whatever. So I just wanted to ask you guys, like, what do you guys, on your guys' end, what are you guys seeing foreseeing like the future of the short-term rental market being, say, like the next 12 to 24 months?
Yeah, I think running the short-term rental business is like the maturation of any other competitive business landscape.
Right.
There's always going to be an increase in competition, in which case doesn't mean the opportunity is not there or you can't make a bunch of money. It's just about competing, knowing how to position yourself. And there's going to be a shakeout. The hobby operators, the ones that don't know what they're doing, of course, those numbers aren't going to pencil out. Or even if they do, if they don't know how to operate, off their assumptions, then it likely won't work out. So it's just going to be, it's really about knowing your demographic, building around an experience versus just, good design's not going to do it anymore. If your stay is for anyone, then it's for nobody, I like to say. So you have to really know, is this tailored towards large groups and families? Is this tailored towards the bachelorette parties? Who is your tribe, and really get to understand what accommodations they want, what amenities they want to compete. So just because there's competition doesn't mean that you can't win. And furthermore, if, we had some anomaly years with COVID and, 2021 numbers, 2020 numbers. So in your analysis moving forward, operating short-term rentals, it's more prudent to look at previous performance from maybe 2019 to run conservative estimates. I also do see for the market, as competition increases, there's regulations. There's the short-term rental play, and then around that is for regulations midterm rentals. Doing 30-day stays, 60-day stays, 90-day stays with traveling nurses, corporate housing, and insurance claims. So I see that as the future moving forward with short-term rentals.
I think a lot of that Airbnb bust or B&B bust, they're looking at the market as a whole. And, there was a ton of new investors that jumped into the space in 2020 and 2021. The short-term rental market was just ripping. And it gets back to that, less experienced operator, just thinking that you just get into a short-term rental, it's going to automatically print money. You don't have to do anything passive, get all these automations and that's it. That's not going to be the case going forward. It always happens when you get into these kind of, tightening cycles, credit tightening cycles, you kind of shake out, like Dan said, some of the lesser experienced operators, because we know a lot of operators in the space, the ones that are professional and doing it correctly, they're not experiencing any Airbnb bust. Yeah, maybe numbers are down a little bit from from 2021, but it's not like it's not cash flowing anymore. So it's really it's the the experienced and professional operators that I think are gonna really do well on a go forward basis.
Yeah, and I mean we're just talking about general business operations at that point, where it's like, I've always said it before, you don't want your property to live on a specific platform. Yeah, we're underwriting the properties based off, say, Airbnb, VRBO numbers. But for you to just think that Airbnb is just going to be your business, where you're taking a property and I'm just going to place it on the side and it's just going to do well. With, like you said, with like market saturation and everything, you need to be treating your property like a business. It's not, you're putting the right systems in place, you're putting the right people in place, you're putting the right teams in place. And then another thing, which was I've said to the students of this program, was like it's not normal to operate at a 95% plus occupancy throughout the whole year. If you look at, when I first started, there weren't really any tools on short-term rentals. I mainly relied on like resort books or like hotel books to sort of learn the short-term rental space, just in terms of hospitality. And hotels operate at like 60, 65, 70% occupancy, and they're happy if they're at those numbers.
50%
so
sometimes.
To be underwriting though, like you need to be moving forward. I think my opinion on that would just be just scrutinizing the underwriting a little bit more. Like, you're going to be underwriting more deals, but at least for you to just completely dismiss short-term rentals completely with what we're going through in this high interest rate environment, I think would be just completely foolish.
Yeah, absolutely. And I think, there's I think that a trend that's going to happen for the first half of this year is, although the interest rates are higher, you're seeing the values in certain markets start to compress. So I think there's going to be a pretty good window of opportunity, for the savvy investor, to be able to get some pretty good deals. Yes, obviously the interest rate and the cost of debt is higher, but you can probably largely offset that by some of the discounts that you can negotiate or get on the purchase of the asset. And to your point earlier, if it's cash flowing, even at that higher interest rate, real estate's a long game. You're going to be, benefiting from the appreciation of that property, for 5, 10, 15 years, whatever the whole period is. So, focusing too much on just what, current short-term interest rates are, I think is a little short-sighted.
Yeah, you got to, the phrase we like to use is marry the property, date the rate. So you can,
absolutely.
Might be a little bit higher interest rate now, but if the opportunity comes to refinance, then you refinance, lower your cost of capital, or you lower the cost of your operation, and you still had gotten a good deal on that property.
Yeah, marry the property, date the rate. We're getting SBA. We're getting SBA financing on a construction loan right now, and like the rate went to like 9.75 for like long-term debt essentially. And I literally like I texted that to all my investors, just like trying to calm them down, like just marry the beautiful property, marry the property, date the rate. Yeah, absolutely. And you guys, Daniel, you just touched on something too, which was something we were talking about previously. Is I'm not gonna say the emergence, but sort of the growing popularity in midterm rentals, and it being a really viable strategy. So do you guys finance midterm rentals? Are you guys seeing more midterm rentals come across your desk? And just like what you
we're
guys
seeing a lot more of that strategy being implemented and coming across the desk for a few reasons. One, the main reason being regulations, and then two, what I've seen is not an either or strategy with a savvy operator, is more of a yes and strategy. So rather than trying to Airbnb, excuse me, we don't use that term, short-term rent,
hospitality,
their property, in an area that has a high season and a low season, they're trying to struggle through the low season, rather than trying to continue bookings there at a lower occupancy or plug in, a very low paying long-term renter. They're comparing the strategies and putting a midterm rental in there during the low seasons, and then doing the short-term rental play during the high seasons.
Yeah, absolutely. I mean, that's what we're doing right now.
Yeah. And then it becomes, very important on the asset selection. And it's just really knowing your investment strategy, right? Because if you like do a hybrid play between STR and MTR, obviously if you've got, a cabin way out in the woods that does really well on STR, but it doesn't have that same draw for, the clientele, in the corporate or traveling nurse space, it's obviously not going to perform as well. So just getting back to, really the professional operator and the people that are treating this seriously are the ones that are going to succeed, and they're the ones going to succeed by really knowing who their target demographic, target clientele is.
Yeah, and it's just, I mean, at the end of the day, it's just going to create more opportunity for those people that actually treat it seriously. It's like the people who, I mean, I'm already seeing it just working with real estate agents. Like you're seeing properties hit the market that I know for a fact that I saw last year that I got outbidded on, and now they're put on the market. And I mean, just if from a purchasing standpoint, I mean, those operators are going to do phenomenal with purchasing those properties and plugging them into their systems that they already have for their companies and stuff. Yeah.
Definitely.
Yeah, so guys, I mean, that was practically all the questions I had for you guys. If you guys want to, if there was like one thing that you guys would want to leave with the community here in terms of financing short-term rentals, something that you guys see on a constant basis that like is just like a sticking point or struggling point for someone, like say someone's coming to you guys brand new, they're in rental arbitrage, they're subleasing properties, but they're wanting to purchase their first property. What's the main sticking point that you see like a lot of people not get like past the pre-approval step? It would probably be the biggest thing that I can think of for this community.
I wasn't going to say the pre-approval steps. I was going to speak to financing, more of like mindset. And once again, in seeing people making that jump from say like an arbitrage play to, actually acquiring a property with a mortgage, is the fear component. And absolutely. Definitely do your diligence, understand your market. Don't rely on one projection source, network with people in the space that are operators and get some, maybe more insight onto, how to succeed in that market. But you can only do so much due diligence. And at some point you have to pull the trigger, trust your gut, make the move. And then from there, you'll really figure it out. If you're taking it seriously, you'll figure it out.
Yeah. Awesome. And so where can I'm sorry, Adam, go ahead.
Oh, I was just going to say, certainly in this market and going forward, it's definitely important, like Dan was saying, is do your due diligence, look at a couple different underwriting perspectives, right? You want to see what a property may do on a short-term rental basis, see what it does on a long-term rental basis, midterm, and kind of look at all those different options. So, one bad month or, some type of dip in your occupancy that's unexpected doesn't all of a sudden put you, behind the eight ball and, you're don't have the cash flow to service the debt or, anything like that. So just kind of, being diligent about reviewing the property and confirming that you're going in, eyes wide open.
Yeah, awesome. And where can people find you guys, Host Financial, if they're looking to get a loan from you guys or do work with you guys?
Yeah, it's just www.hostfinancial.com. That's our main website. We've got, we actually have a short-term rental revenue calculator partnership with AirDNA on there. So it's,
Cool.
you know, if you're looking at some properties, you can just pop in there and like enter in the details to get some, you know, very basic income information on that property. It's very helpful when you're, you know, shopping multiple deals. You don't have to be, you know, getting the full suite of the data for multiple different markets. Obviously, you know, once you buy a property in that market, I think it's very beneficial to have the full data suite. And then all of our loan programs and submission portals are right there. We've got a web-based tech-enabled application. It's very simple. Fill it out in 60 seconds. It gets routed to one of our account reps, and we usually turn around preliminary term sheets and pre-approvals within an hour, a couple hours, depending on how many else are going through pricing at that time. So it's very fast and efficient.
Awesome. Yeah, no, and we'll link all that in the comments and the description below on this call. So I appreciate you guys. Again, this is one thing that I know like a lot of the students are gonna find very beneficial. So I really appreciate you guys hopping on with me.
Yeah,
we appreciate you having us.
Thanks, guys.
Thanks.